Hi, everybody. This is Gary Demas, Sentiment Timing, and this is our technical video report for Tuesday, January 21st, 2025. So we saw really the bulls do what they've really been doing, and that's really just gapping this market higher. But this one we actually saw come down and just about close the gap. I took a quick little, I sold some premium and I covered when we got at this support here. So it was one of those things that you either had to just just trust that the bulls were going to keep things going or buy that dip and then, either sell some premium or let just really watch. So I think I did 1,500. Let me see. Yeah, we did. It was 1,500. So, not no crazy day, but it was it was all right. So anyway, let's see what's going on. I'm gonna go back to I'm gonna go to the daily chart here. So this was one of the reasons why I was getting bullish down here after we closed this gap. And then from there, we just started seeing gap higher opens, and this is where we are. So as far as the resistance, what we can look at is we obviously have the previous highs here at the 61.09, and then we're really at the next one right here, right at the 60.56. So I know that Netflix, their earnings were really good, and that's up a ton. So maybe we have a gap higher open. But what that will do is, especially if we gap over this, that's going to be a pretty big gap higher open. But if we gap to new highs, really that's going to be that trade that has a almost 100% success rate. When we gap up to new all-time highs, you fade it within the first hour, and you're going to make bare minimum at the closure of the gap. So we haven't been able to see that for quite some time. So maybe they can do it. Let's see where the high is. 60.90. Yeah, say 6,100. So it would have to be a 50-point gap higher on it if it happened. But, that would be a nice setup. So we're now getting into the overbought levels. So, again, at these resistance, even if we take them out, I still do not believe that this is going to be any kind of sustainable rally and that we will come down and close these gaps and most likely get a little bit of a deeper pullback. But right now, just from the the different charts that I showed you yesterday with what did I show you? The 10-year. The way that's been getting under pressure, and as long as that's under pressure, then you're going to see money find its way into the stock market. So it's one that we kind of got conflicting data because we have a sell signal on the 60-minute charts. But we have, then again, we have, the buy signal with that was on the daily chart and then on the 10-year. But the thing is that when you look at the put-call ratio, like I showed you, that's down at, kind of those record lows, and it's really not a good place to be jumping on the long side blindly. So if we head higher, I'm actually going to be looking to, sell some put premium tomorrow. I may even take a little bit more of an aggressive trade, but for right now, if they gap up, then I'm definitely going to be looking to just sell some call premium. So on the downside, let's take a look. This is the 60-minute chart. Here you can see we have bearish divergences. So unless they fix this and we gap higher and this comes back up again, then we're going to have the sell signals in place, and we already know where we want to be looking, anywhere from this the 60-80, well, right where we are right now, the 60-50 up to this to the 60-100 in that area there. So on the downside, though, really what the bears are going to have to do is get it through this support, the 59.94, and then more importantly, it's going to be the 59.80. If they do that, then we anticipate that we're coming into one of these levels, but we have the sell signals. If we look on the 15-minute chart, again, grinded higher, but these are all on sell signals. So, Mr. Market's giving us some warning signs right here, and again, I think that if they can maintain, say, strength overnight and we see the market gap up another 30, 40 points, I really believe that you need to start looking to build a short position, but let's just take that day by day and see exactly what plays out. So support levels, obviously this is going to be the first really important one. That's going to be the 60-20, also the 50-day moving average on the 15-minute chart. If that gets taken out, we have some support right here at the 59.93. And then we have it right around here at the 59.60 with 59.52 as the 200-day moving average. So these would be areas I would like. But again, with these open gaps, I'd be very careful. So the one thing that I wanted to point out, if you remember, this entire move that we were getting here, my upside target has always been the closure of this gap right here, which actually, hang on one second. Where is that gap? Is it 60.36? So that's right here. So this is the gap that got closed. So now we're back into just looking at all these the gaps that are underneath. And as I said, when they typically do it in this kind of fashion, it only takes about a day to wipe out everything, even though they've been grinding higher, because once momentum really starts picking up on the downside, these support levels aren't there, and the next targets are going to be the downside gaps. So I don't know exactly when it starts, but I'm saying just to start have your your spidey senses out for some type of reversal. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.